K. Ramanathan, CIO at ING Investment Management as well, joins us on the show to talk about the fundamentals the market is working with. And Ram, clearly it seems like our markets are running on their own steam. Even with the big election overhang, you've got a suitable and favorable current account deficit data, and that seems to be keeping the market buoyant.
Yeah, as we go into the election period, there is always hope and expectation built up on a positive outcome. Based on the earlier exit polls as well as the feedback from several psephologists, clearly there is an indication that there could be a NDA government at the center and there will be revival of policies. So the sharp movement in some of the so-called domestic stocks is a result of this. Now one needs to see whether these sustain. These are not very richly priced as of now, so there could be some more leg up in terms of movement of these stocks, especially stocks in the banking space and to some extent in the capital goods space. The capital goods space has had a very decent run, and I would say today some of the names are quite expensive. And there is a lot of hope and expectation built up that the capex cycle will revive soon.
So, what should an intelligent buyer do in this kind of a market? Stick to basics, which is IT, pharma, stick to companies which offer visibility, or it's time now to lean towards hope, assumption, and towards valuations?
It should be a mix of both. At least I can talk about the portfolios which we are running. We have been overweight IT and pharma, underweight on utilities, underweight on telecom, overweight on autos, and neutral on financials. We have been cherry picking some amount of beta exposures in the financial space. So not taking very defensive or very aggressive calls, and also taking a large amount of off benchmark calls. More bottom up in nature, where there, as you said, there is good amount of visibility in terms of cash flows and business.
Are you happy to own cyclicals or the cyclical stocks which you are buying, let's say for next 1 year, or you're simply buying into cyclicals for a pre-election pop?
No, we are not clearly traders. We look at individual stocks. It's very difficult to generalize financials. In financials itself, you have several spaces. You have the finance companies. Even in finance companies, you have the retail finance companies, you have the CV finance companies, the gold finance companies. In the banking space, you have the old private sector banks, new private sector banks, PSU banks. So you need to clearly cherry pick the stocks where you are comfortable with valuations, where the downside probability is low. Even if for whatever reason there is a negative surprise in the election, these may not fall as much as the market. So clearly we have in our portfolios populated stocks which are more bottom up in nature, where we have visibility on the business, where the downside probability is low, rather than playing the pre-election rally.
So now what's the sense that you're getting about the overall index move? I mean, we're just a few points away from an all-time high on the Nifty of 6415. Okay, as we speak, the Nifty futures have already scaled that 6400 mark. Let's see what the Nifty futures are currently up to. Of course, you've had a positive start to the European markets as well to aid the move. There you go, 6400 is here. So, I mean, clearly, Ram, it's now just a theoretical level for the Nifty to scale above the all-time high. But do you think we could see a meaningful rally coming in before the elections, or would that happen only post?
Actually, the rally is already happening as we speak, clearly driven by the stocks and sectors which have got beaten down earlier. In the hope that there will be a stable government and there will be a slew of policies which will improve the growth prospects. But if you see, there is a common consensus belief that growth in India has bottomed out. We have seen 4.7% growth. This year people expect an average of 4.8. But if you see the expectations next year, the growth, GDP growth ranges from 5.2 to some extent 5.66% also. So clearly there is a expectation that irrespective of the government in the center, the growth is bottomed out and there is a revival. So to some extent the rally or the movement, I mean, I wouldn't call it a rally. A rally is one where the market moves by 10 or 20%. 6,200 to or 6,100 to 6,300 is not a 20% kind of a movement. So the a positive mood in the market is also borne out by the fact that we could see only an improving scenario on the fundamental side, though everybody expects the recovery to be back-ended. It's not going to happen in the next 3 to 6 months. The feedback from corporates, including the chairman of PSU banking space, clearly say that there is still some more pain left. It could be a couple of quarters, it could be 3 quarters, but not more than that. So obviously the markets tend to build up the positive expectations slightly ahead, typically 6 to 9 months before the actual improvement comes. So that's what is happening partly, and partly it is also because of the pre-election or the election expectation that there will be a stable government in the center.